Well, hello, friends, and welcome once again to another episode of the 360 Experience podcast. I'm your host, Tim Braheem, and I want to welcome you to my conversation with Ryan Grant. Now, this is the second time that I've had Ryan on the show, and he's a colleague and a dear friend and a client. And I mean, so many things in my life. We've known each other for 6 or 7 years now, and maybe a little bit longer than that, in fact. And Ryan is such an amazing teacher. Today, we're going to talk about a wide variety of things. And I want to really encourage you to listen to this entire episode. And the reason is because there are some very important things that we'll be discussing in the second half of the conversation. We're going to start by talking a little bit about leadership and the lack of leadership in the mortgage space and what he's seeing out there as someone who's out in the trenches all the time. But then we're going to transition to talking about real estate agent partnerships and what the real estate agent and lender of the future needs to look like and how they partner together in a dynamic way. You're going to hear amazing scripting, amazing strategies, and some really good practical implementation strategies to forge deeper relationships with real estate agents. And then finally, we're going to talk an awful lot about technology. Ryan is on the cutting edge of some technological advancements in the mortgage industry that you're going to want to know about. Some of these things are going to blow your mind, and you're going to want to embrace them. Speaking of embracing them, we're going to also talk about change and how it can be difficult for originators in this industry and difficult for us as human beings in general, and what you need to be doing to embrace change. So buckle up. This is going to be a deep, enriching, and incredibly valuable conversation. Once again, with one of the great teachers in the mortgage space and a dear friend of mine, Ryan Grant, in the 360 Experience. Now, before I get to our conversation, I just want to say thank you to those of you that just subscribe to this show. Our subscribership is increasing every month, which is great. And I would ask that you, if you don't subscribe, please do so because it really helps us. And then finally, if you find this episode to be valuable, which I think you will, forward it on to some other originators that you know in the mortgage industry that would benefit from it. Give us a like, if you would, on your favorite podcast channel or a comment on YouTube. And without further ado, my conversation with my good buddy, Ryan Grant, in the 360 Experience. What's up, man?
How are you, buddy?
I'm hurting. As I was telling you before we started this recording, I'm on the disabled list. I've come to the conclusion that pickleball is a very dangerous sport. And the reason I think it's dangerous is because it seduces old guys like me into thinking that they're young again. And I tore my calf muscle a few days ago playing doubles, and just so happened that the guy that was on the other side of the net was an orthopedic surgeon.
Oh, wow.
So he knew right away what had happened, and it's just going to take, it's going to take some time. I'm on the DL. No golf for me, no pickleball, can hardly walk.
Oh, man.
But I could sit here and talk to you, which I guess is a benefit, right?
Close second to pickleball.
Yeah, exactly. Good to have you back, man. I mean, can you believe it's been 2 years since the last time we did this?
No, it honestly feels like just the other day. But yeah, I was, a couple houses ago now. And so, yeah, it's been a minute.
Are you guys moved in to your new house?
We are. Yeah. Well, we're living in the new house. We're actively still moving our stuff in from the garage. So little by little.
Well, you got a lot of space to fill. That's a big house. So I'm sure it takes a long time to move. But that'll be nice. I'm sure it'll feel really nice to be settled in for the holidays. I'm sure that Brianne and the kids will love that. So
yeah, we're super excited.
Right on. Well, I mean, there doesn't need to be much preset questions or scripting for a conversation with me and you. I'm just excited to see where this thing goes. So yeah, I think that where I want to start is, I think that it's good for everyone to have a little bit of a background, those that don't know you. I mean, obviously you're a superstar originator, #1 in Orange County for several years. And now, I mean, you have a tight finger on the pulse on a national basis with your role. So tell us about your role and, what that exposes you to, I think would be the right way to say it in terms of interacting with loan originators in today's market on a consistent basis.
Yeah. So, I'm the president of Neo Home Loans, now powered by Better, which is a recent evolution of Neo. And because of that, not just because of that, but because of my kind of role as a leader of Neo for the last 4+ years, I've had the opportunity to engage the mortgage industry at a higher level, right? Really understand how the economics of the mortgage industry works at a higher level, understand the challenges that are inherently a part of this business in a way that as an originator, I just didn't know. It's an interesting evolution of, starting as an originator, growing a team to help you continue to grow your originations, right? And then start to help other branches as kind of like growing a division. And then ultimately starting Neo in 2020 and having that evolve over time. I just feel like I'm constantly learning. Just when you think that you kind of know everything about the mortgage industry, you find out there's more to learn. And then there's, regulatory changes. There's obviously changes in the lending environment with interest rate fluctuation. And you have to just continually learn how to lead through that. Because I think that's the biggest missing component in the mortgage industry today is real leadership. There's no lack of managers. There's no lack of mortgage professionals, but there seems to be a real gap in leadership amongst most organizations, and we're trying to fix that in our own way, not just within Neo, but within the industry as a whole.
Let's take a deeper look at that. So it's actually fascinating to me. I don't mean this to be disparaging to any company or any person, but it seems like in the mortgage industry, the word manager is thrown around pretty loosely, where a lot of people have that title, but they don't really have the training to really fill the role of what that title, I think, means. I mean, so when you say that there's like a lack of leadership and a lack, there are a lot of managers, but a lack of leadership, maybe you could dive a little bit deeper into what you see is missing within the industry right now as it relates to true leadership and what true leadership looks like in your mind.
Yeah. So ever since I've been in the industry, and I believe this was probably true before, right? So when I started in 2005, my first experience of a quote unquote manager was a guy who was really good at doing loans, who lived in Miami, and then they opened an office in Santa Monica, and that's where I was, and he became the new manager of that office. He had zero qualification. He had never led a person before. He had never managed a person before. All he did was just do loans at a high level. He was good at relationship building. He was good at, selling loans. And for some reason, that company and most companies believe that, well, if they're good at doing loans, we can put them in a position of, managing and leading others to replicate their success. But it takes real training. Like, there's some qualities that you can have that are transferable into leadership, but in my experience, not a lot. I grew up with a lot of confidence, mainly because of my background in sports and in, a lot of, different martial arts and boxing and wrestling, right? So I had some inherent confidence from that. But in the business world, I wasn't extremely confident. And so to lead other people to a better place and to listen to them, to have empathy, to have vision, to put yourself last, right? To disconnect the outcome from the conversation. Those aren't inherently, these aren't natural things, right? Like naturally, we are selfish individuals, right? Because we want to stay alive, we want to thrive. It's kind of in our DNA. So we have to learn how to be a leader. And I've had to, obviously, L360 has been massive in that. I tell everybody that wants to be a good leader, that is just the absolute best program to go through for it. Done a lot of stuff with Jocko Willink in his program. One of my favorite books is Extreme Ownership. That's something that is not natural to me. It never has been. So I think that the mortgage industry just needs to do a much better job of leadership training as a whole, because we just keep promoting high producing mortgage professionals to these roles. And we wonder why we're not getting, why there's a lot of turnover, why people are always trying to go to other companies, and, why you don't see, there hasn't really been one or even a few really great companies that have kind of really risen and stayed there, right? It's always a lot of fluctuation. So I'm hoping that we can help the industry see a need for leadership training, mentorship, coaching, because if our industry really wants to survive and do well, I think we need that most importantly.
Yeah, it's interesting. There's that statement. I don't know if it's from Simon Sinek or not, but it's, a leader is not responsible for the outcome of things. A leader is responsible for leading the people who are responsible for the outcome of things. And I think that that's or some version of that. I may have hacked that up a little bit, but I mean, when you think about it, it's like, it is like you said, an entirely different skill set. And I think that there's an inherent frustration that a lot of leaders have when they make that transition from being, a great producer of loans into now having to be responsible for, empowering those underneath them to produce loans. And there's a great difference between the skill of being that great doer and being the person that can lead people to do at a higher level. And there isn't, you're right, a whole lot of training involved in that. So what would you say you've learned are some of the skills that are in need of being trained up to be a more effective leader in the mortgage space?
I think active listening is a really good one, right? Like being able to really hear someone, right? And put yourself in their shoes. That was something I was just not great at, right? Because if I was good at something, I would tell someone, okay, just do this. And I would expect them to automatically just go do that thing, right? But then if they gave me feedback, I would almost just always look for my own answer, like to like, well, no, I can fix that. I can solve that, as opposed to like empathizing with them, really understanding where they're coming from. A lot of the stuff around, genius zone work, fear setting, right? The stuff that you've taught a lot of us, right? Great leaders help people manage their emotions, right? Because that's in large part what holds people back, right? It's fear, it's, anger, it's frustration, it's
lack of confidence,
right? Feeling less than. So what I've really focused on from a leadership perspective, and look, I still have a long way to go to be considered a great leader, but the thing that I have tapped into is I can help people see a vision of themselves in a way that they can't currently see, right? Like I can find the best potential in someone and kind of hold up a mirror for that person and see like, this is what you could do, right? This is what you're capable of. You may not see it yet because you haven't gone through that journey, right? But I have. I've gone through it, and I know what it takes, and I know the challenges and the pitfalls and the struggles and hiring teammates and understanding how to grow and scale a team and dealing with realtor partners and being at the same time a good father and husband, or wife or mother. And a lot of times, I really wish I would have had that person in my life. It wasn't really until L360 in 2017 until, I was already, quote unquote, successful from a business perspective, but I had a lot of holes that needed to be filled. And that helped me in a lot of different ways, and then I think partnership is really important. Managing ego. All right, being able to be business partners with people like Danny Hirani and Chris Ledley, and then Josh Metal. Like I was able to learn so much from all of these great leaders that you have to experience to really learn.
Yeah, so let's take a look at it through the lens of a loan originator in today's current market. Here we are in late 2024. It's good, solid 2 full years, and maybe a little bit more than that. Things have been challenging, right?
Yep.
Probably 2.5 now. Some people have figured it out, right? We go back to that mantra from a couple of years ago when we were, I don't know what that was there. I think my mom's Google Home thing came on, so I don't know if
Oh,
you
I didn't hear
heard that in the
anything.
background. Okay, distracted me there for a minute. But back in 2.5 years ago, we had a massive change in the market. We kind of inserted a mantra into the Leadership 360 program. We're just figuring it out, and some people have. Like, I mean,
Yeah.
there are people that we know, you and I, that are actually doing very well right now. And they've shapeshifted, right? Like they remade themselves. And then there are many that are still trying to find themselves in that regard. So what are the things that you're seeing that originators in today's current market are struggling with? And what are some of the things that you're seeing from a few originators that they've figured out that are now having success as a result of kind of changing the way that they've approached the business?
The thing that I see most people struggle with is that they've lost their identity with who they knew themselves to be prior to a higher rate environment. So, when rates were really low, I mean, ultimately really 2011 through 2022, right? So a good 11 years where a lot of inventory, affordable homes, low interest rates, a ton of demand for mortgage, right? Cash out, homes going up in value. There was just a lot of opportunity, and people put their self-identity in their production, right? Like, I am a good mortgage professional because I do X, right? Because I do X volume or make X amount of money. And well, whether it's founded or not, it created confidence, and that confidence bred an easier path forward, right? Because when you're doing well and people are saying yes, and you're getting partnerships and you're closing loans, it's much easier to go make the next call, right? To book the next meeting, to go to the next open house, because you're motivated because you see success immediately, right? You see your results show up immediately. And it's easier to do hard work at that point, right? It doesn't even feel like hard work, even though, it is. There's long hours involved in that. What happened was, when the market shifted and took all that away, right? People didn't feel the same about themselves. I mean, I can't tell you how many conversations I'm fortunate I get to talk to, dozens, if not more, mortgage professionals a week, not just within Neo, but at other organizations. And the first thing people say almost always is, well, my production's down. And then they start telling me all the reasons why. And I can just feel that they have low energy, right? I can feel that they are not proud of their production. And there's some people that will be like, oh, I'm only doing 50, 60 million this year. And they're down about it. It's like, that's a pretty good number in this day and age. But it's not what it used to be, right? So it's all relative. It doesn't matter where they are. It could be doing 100 million, but they were doing 400 million before. So that is the biggest thing, is that they just lost it here. They're the same person, right? They have the same opportunity. I would argue they even have a greater opportunity now, right? Because they're kind of fighting a battle against people who, they've kind of lost the spark. Right. So their competition isn't as fierce as it used to be. That's the number one thing that I've seen. It's also a resistance to change. People don't are very much pushing back against the concept of having a beginner's mindset. Right. That just because you got here by doing X, Y, or Z, right, doesn't mean that you're going to get to where you want to go by doing the same thing. So how open are you to the idea that you may want to change some things, right? You may want to change your value proposition. You may want to change your client experience. You may want to change the way you look at your business partnerships. You may need to make some personal changes, right, about your mental health or your well-being or your diet or exercise or your friend circle or whatever it may be. It's just, most people have been in this business for a long time. It's pretty rare to meet someone who's only been in this business for 3 or 4 years, right? Most people are, 10 years plus. And it's hard to create new pathways, right? And for people to say, look, okay, I'm going to be open-minded. I'm going to learn. I'm going to try new things. And I'm going to pivot, right? Like, I'm reading a really great book right now called Pivot or Die. And it's just been really enlightening on how people push back so much against change. Right? And they would rather just slowly wither away into the ether as opposed to making a pivot and changing to do something different. And I think the mortgage, I mean, obviously I've never been in another industry, really professionally, other than the mortgage industry. But I can't imagine other industries are this staunchly opposed to pivoting, changing, trying new things, and kind of skating to where the puck is going.
I think that in fairness to, and I've not been in many other industries. I mean, just a small glimpse in the restaurant business and maybe a little bit different in the coaching business, but in the same industry. But I think that what is different about the mortgage industry is it requires more pivoting than most industries because of the cyclical nature of, everything from rates to technological advancement to the sources of business having changed a bit over the years. So you're absolutely right. People resist that change and that pivot. Why do you think that is? What have you ascertained is the reason why people have such a difficult time having that beginner's mindset and remaking themselves?
Largely because they didn't have to for so long. All right, if you have an 11-year run where all you really need to do is just show up and you could have a certain modest level of success, right? Obviously, it depends on how much you show up and what you do. But if you just keep doing that and your success grows and grows and grows, like, the basics in the mortgage industry oftentimes work. Not all the time, but oftentimes, right? Call your database, stay in front of your realtor partners, right? Give good customer service, just do the basics. And over time, you should get more and more clients, right? You should get more referrals, you should get more at-bats. And that happened for people for 11 straight years. And so telling someone who was used to a certain lifestyle, right? Used to a certain level of income, used to a certain day-to-day routine, right? Didn't have to get super uncomfortable because they were comfortable in what they knew. I don't think 1 or 2 years is enough to really get people, like in this book, it talks about there's the like a forced pivot. Like you absolutely have to, there's no choice. Like it's a forced pivot. There's a failure pivot, which is you failed, right? So now you have to pivot. There's a success pivot, which is you're already successful, but you pivot because of it. And that's the hardest one for people to do, right? Is the success pivot. And that's really where people got stuck, right? Now they're sometimes either being forced to pivot into an industry, right? Go find another job or do something different. But what I'm proud of our group, and I'm proud of a lot of people, in the loan analyst community, is that these are people who are open not only to a success pivot, but to looking into the future, right? And saying, okay, this is where we think this is going. Who do we need to become, right? What do we need to do? What do we need to learn? What skills do we need to create in order to meet that opportunity head on as it shows up? And I think that just, again, it takes leadership oftentimes, right? It takes somebody that has the vision to say, let's not just slowly erode here, right? Let's actively work towards the disruption and becoming the disruption, not just being a part of it.
I think that it's interesting. I've already written down the name of this book because it sounds like something that I would probably enjoy digesting. So, I don't know whether this episode with you is going to air first or the one that I just recorded yesterday with John Wade. My episode with John Wade was extremely enjoyable, and I highly recommend that you have everybody in your organization listen to it.
I will.
You know him vaguely, I think.
Yeah, we talked a little bit.
He's a very successful loan originator. And so many of the things that he does that equal his success are the most subtle and little but important things. Like just so many simple daily disciplines that equal why he does the volume that he does. And it's interesting because those daily disciplines are ones that you and I both know to be true, and did when we were originators as well. And in my case, many years ago, if not, a few decades ago at this point, and they still work. And I think that, to your point, during, this great run that we had, and especially the COVID years, you didn't have to do the daily disciplines, that got you there. And I believe in our previous podcast episode, a couple of years ago now, you had talked about this peak and trough aspect of the business. And you had made a statement that I thought was very profound. And I think it's very true to this day. You could make a case that bringing in a brand new loan originator that's never done a loan before, that they would have a significant advantage over somebody who's been doing loans for 10 years. In that person would have that beginner's mindset. Or said differently, and I don't know if you remember this walking contemplation that we did on retreat a couple of years ago, but there's this one part where Wayne Dyer is the person's voice, and he talks about the fact that, like, if you take somebody that's never played tennis before and you teach them how to hit a backhand and how to hit a forehand, they're open. They're just open to your instruction. They know no different. Versus if you take somebody who has played for 10 years but has poor form, they're going to be a lot more difficult to teach how to hit the proper backhand or forehand, because they have a way that's already ingrained in them of doing things. And that's what I think makes that pivot more difficult. And I think that what we're really talking about here, and John and I talk about this in our episode, is the subject matter of momentum. That period that you're referencing, where originators were just doing a lot of loans and they had that confidence in themselves. They had the energy of momentum constantly fueling them. You lock 2 loans today, you lock 3 tomorrow, and it's just like one feeds on the next. Yep. All of a sudden, when that goes away, you have to figure out how to create your own momentum. You have to figure out how to create your own energy that drives you. And that's where, like, the leading indicators are different, aren't they? I mean, it's not locked loans now, it's something very different. So what are some of the leading indicators that you have been, impressing upon your originators over the last couple of years? And maybe you could even talk about an originator or two specifically that has done well, if you feel comfortable doing that, and why they've done well, like what you've seen in them that has led to them being successful in this market. Yeah.
One of the guys that you just got a chance to spend some time with, Justin Padron, is a phenomenal example of this. When I first met Justin, he reached out to me. He saw a lot of the stuff that we were posting on social media, and it connected with him. And he reached out to us a couple of years ago, 2.5 years ago or so now. And he was doing decent, right? He was doing good business, but he was just like every other mortgage professional, right? Just trying to go out, get business, quoting rates, trying to close loans. And he is one of the most open to learning and executing people I think I've ever met. And so when he came on, he lived in our training environment for hours a day, right? He would watch game film. He would listen to recordings. He would read scripts. He would, practice with himself and others in role play, and reach out to me, and we'd work through things. And he'd send me his game film, and I'd critique it. And he would literally call me at 9:00 at night and be like, "Hey, I'm working through this thing. I've watched a couple hours of this now." He puts his kids to bed, and now he jumps on Loan Atlas, and he's watching and he's learning. And he's had the best year of his career in 2023, which almost nobody can say. And then he'll beat that again in 2024. And it's because he was open to being new, right? He really came at the industry like he was new to it. He almost just disregarded the things he did to the past. And that's one of the things, Tim, that, we named our company Neo, which means new. It's because oftentimes that's the advantage, right? New companies or new individuals or people who are treating their businesses new, they're not bound by the expected or ingrained way of doing things, right? You typically see bigger, more established people who've been more successful, 20 years, big companies, right? They have a certain way of doing things, and they're really hard to pivot that ship. And by necessity, someone who's new is really constantly experimenting, right? They're in an experimentation mode to invent a whole new product or business idea. And that's really what we've done. And that's what our team is doing. And obviously that's what Loan Atlas is doing, trying to create that mortgage professional of the future. Because it's not about coming up with a great idea in round one, right? It's about evolving every round through round 10, right? And continuing to learn and like see what your opponent's doing and see what the market's doing and, becoming open to changing. So some of the leading indicators that we really focus on, and, a lot of them are a little squishier than I'd like them to be, but we say, like, how many times do you surprise people in your conversations? And people say, well, what do you mean by that? Like, when you tell someone what you do, how often do you say, oh, wow, I've never heard of that? Or, oh, well, that's cool. Or that's interesting. Or that's different. Or that's unique. Right? Or like, how many times do you tell someone something that they're not expecting to hear from you? Right? Because to me, that's a really great leading indicator that you have an opportunity to impact someone in a positive way, right? They're now open to hearing you. How many, when you're meeting with a client in a client consultation, how often are you teaching them something that they didn't know?
Yeah, can I jump in on that? Because that's funny that you brought that one up, because I was just thinking, I've never done this, but this just kind of popped into my head. A really cool thing to maybe say at the end of a client consultation would be, so if you would, before we're done, share with me anything that you learned today that you didn't know before we had our conversation.
Yeah.
Which then does two things, right? Like, I mean, because you're so spot on, like those are great questions you're asking. Like, how many times did you surprise somebody? How many times did you show uniqueness? How many times did you teach them in a conversation? I mean, if an originator looks at it through that lens, then they're going to be constantly compelled to learn and grow and evolve and get better. So those become conversations where the answer is 3 things, 4 things, et cetera. But if you ask the client that question, essentially what you're saying is, so just so you understand, or just so we're clear, like, this is what you get in a relationship with me, is that you will learn about your financial situation. You will continually improve and get better. You're kind of highlighting your value proposition by asking that question, but you're also highlighting for yourself. It's like we're taking the focus off of stagnancy and putting it on evolving, right? And I think that newness that you're talking about with Justin is so incredibly important. Keep going. Sorry to interrupt, but like, you really hit on something there that I want to play with in my head, because I think that's a brilliant concept.
Yeah, it's the same concept with real estate professionals, referral partners. Like, if you're meeting with a real estate agent, at the end of it, great question to ask is like, what did we, of the stuff we talked about today, what were some of the things that you didn't know, that lenders would do in a business partnership, right? That we may have uncovered today, right? Because when I get done with a presentation to a real estate agent, or if I I do a lot of real estate of the future presentations to the mortgage industry and the real estate industry. I get people come up to me at the end of those things all the time. Like, I had no idea that lenders did that. Like, this is incredible. I can't wait to work together, because I never thought about that in my business. I never approached it from that angle. And to me, that's where I know that, I'm winning. That's a success metric, because everything after that just becomes infinitely easier, right? It becomes easier to solidify that partnership. It becomes easier to participate in every aspect of that agent's business. It becomes easier to go deeper in your client's life. It becomes easier to introduce them to their client success manager and have them actually opt in and engage in your longer-term strategy, all because you open their mind to something that they didn't know. It's really the challenger sale, right? That's the philosophy of really where we learn this. Is that everyone thinks that whoever has the best relationship wins. And that book completely dispelled that myth. It's like, it's not about your relationship. It's about the value you're adding that people didn't know or didn't expect from you. Right. And so that's the indicators that we try and get our teams to focus on, is like, how often are you showing up and saying something where someone says, I did not know you did that, right? Or I wasn't aware that I was going to get this value from this conversation.
I want to go to the subject matter of real estate agent partnerships, because I know that you've done a lot of presentations in front of real estate agents. And I think that there's probably some really great stuff for you to share. And I know that you recently, along with Josh and Chris and Danny and Mark, did a great boot camp for Loan Atlas members where they learned a lot of these strategies. And recently on our retreat in Costa Rica, several people like Jim Juergens were talking about how much value that was for them and how much they learned and how they're implementing it. And they're having great success with it. So let's set that aside for a minute and be ready to answer that. But I want to challenge you a little bit and maybe play healthy, counterpoint. So I don't disagree with what you said that it's not about the relationships that you have, and that it's about how much you teach and how much value you bring to somebody, and ultimately how much they learn from you and uncover this. I didn't know that you did that component. But isn't that, I still feel that this is a business of relationships, and those that have the most relationships are the ones that are most successful. And I think I could recite a lot of people that you and I both know that fall into that category, like a Sam Rosenblatt or a Holly Walter or people like that who have a lot of relationships, or Greg Kingsbury. But isn't that the same thing? Isn't that a subset of having a relationship with someone, is that you're of value to them? Doesn't that equal a relationship at the end of the day, when somebody feels like, wow, you're a tremendous resource to me and a valuable asset? How does that differ from, isn't that just a part of building relationships?
Let me give you an example that will be really personal to you.
Okay.
As to why I think a little bit differently.
Maybe make sure I'm sitting down here. This doesn't sound good. Go ahead.
It's going to be good. So I never met you, right? I never really knew who you were in 2017. I had been in coaching for some time, right? And I had relationships with a coach. I had relationships with people, in coaching groups. And I saw you on stage at at Mastermind.
Yeah.
And you asked 3 questions. I'll never forget it. I tell everybody this story. You said, "Have you ever playing a game you think you can't win?" And I was like, "Yeah, every day." You said, "You ever feel like if someone took away your possessions, your money, right, that you would feel less than?" I was like, "Yeah, for sure." And then you said, "Well, do you ever feel like if someone took away your mortgage business that you would have kind of lose your identity?" And I was like, "Is anyone else in the room, or is he just talking to me?" And then I talked to Craig and a few other people about L360 and the signature experience. And I saw a value in that I didn't know existed in the mortgage industry. No one ever coached me that way, right? No one ever illuminated those parts of my life or my business. So because of that value, I was open to a new relationship. Right. And that value to me overrode the relationship I had. And so I went that direction from a coaching perspective. So I'm not disagreeing. And now you and I have, you're one of my best friends. Like we have an amazing relationship. We've done, business together. We have all sorts of great things. Right. But if you would have stood up on that stage and said, "You want to make $1 million more or close a bunch more loans?" Like, I would have been like, "I'm good. I already have that."
Why do you sound like somebody's voice why do you sound like Rick Ruby right now? Go ahead.
It's not Rick Ruby.
No disrespect to Rick. I actually just had a really interesting conversation with him in Vegas for the first time that I ever talked to him. And I found it to be a really cool conversation that I had with him. But you just sounded like you were imitating him there a bit.
No, I've never actually met Rick. I haven't had the chance. But what I'm saying is, if you would have just said what I already know, right, or what somebody would have already coached me on or taught me, right, I would have never been open to that relationship. I would have stayed with my current relationship. So what I'm saying is, it's not that relationships aren't important. It's that you have to show enough value to disrupt the other relationship. That way they're open to the relationship with you, and then you get the relationship. Right? Just going and trying to say, go to coffee with me, Mr. Realtor. Go to lunch with me. I'll take you to go. Like if you're just trying to get them to like you more than the next person, that's a hard, long game. I'd much rather show them value they didn't know that they were going to get and show them how I'm going to completely impact their business in an incredibly positive way. And then I have the opportunity to work on the relationship. But I think people try and do it backwards, or they don't have enough value that's different than their competition. So they're constantly just trying to be let's go get to happy hour, go out on my boat, let's go golfing. Like that stuff works until someone comes along that shows way more value than that person and will also do those things. That makes sense?
I think that, yeah, no, I'm super glad that we're going here, and I want to spend more time in this place that we're at right now. I think it's a really valuable conversation for people to be listening to. I think my opinion is it's both. I think your example is a perfect and really good example that you gave about, my presentation and, how it disrupted the relationship that you currently had. I think that what I see as a potential pitfall that most originators have is that they have this presentation where they are trying to figure out all the things to say to add value, and they're not cueing into the fact that there's an existing relationship in place for that person, and it may take some time for that value to sink in, and it may take some connection. So what I would say is that what I gleaned from what you just shared is that value proposition is a key that can unlock the door to open up a relationship potential. And sometimes that relationship will be forged immediately, depending upon the level of connection that they have in an existing relationship, or if that connection is really deep. So let's just use Kingsbury as an example because we're both friends with him. Like, I think that if either one of us went in and had a coffee appointment with one of his real estate agents and added a tremendous amount of value or perception of value in that initial coffee appointment, we probably wouldn't stand a really high chance of getting that person to drop Greg like a hot rock and move over and start working with us right away. We might kick the door open for there to be further conversations that take a little bit of time where we have to build value over time, but he owns his relationships. I mean, he's got like 12 realtors that are incredibly loyal to him. So the part that I would want everybody listening to hear is that you got to be patient too sometimes. It's not just about go in first appointment, you have all the right things to say, you close them. If you don't close them, you feel frustrated and defeated, like this didn't work. No, sometimes it takes some time to court, right? I mean, we're in a dating process here, and some people are ready for a relationship when they're single, and some people need time to feel comfortable forging a relationship. So how do you feel about that? Like, I'm trying to find a hybrid here of your philosophy and mine.
No doubt I could take all Greg's realtors. No, I'm joking.
He's probably sitting here listening going, yeah, you probably could too.
No. So somebody like Greg is a great example, right? He obviously is highly valuable, right? They're not just partners with Greg because they like him. Right? Not just because he's a great guy and they spend a lot of time together. He is a massive impact in a positive way to their business. Right? But if I come along and say, hey, Joe, right, let me show you what we can do for your business. Right? I'm going to refer you an extra 5 closed transactions per month, buy side, list side. Right? I'm going to convert your business not at 40%, but at 80%. Right. I'm going to, show you how you can tell your clients that you're not just going to help them for 30 days, but you're going to create generational wealth for them and their family for 30 years. So now you can sell a product that's vastly different than every one of your competitors. I'm going to do all these things. Right. Like, that dude's going to keep listening to me. Joe will say, whoa, okay. Like, this is a big deal. Like, no one's said this to me before. I've never heard a lender talk about a partnership that exists in this capacity. Now, does that mean that he would drop his existing lender like a hot rock? Not at all, right? I have to show up and prove it. I have to earn it. I have to, create relationship. I have to do all those things. But if I don't say anything different than what he's already getting, I have no chance at a relationship at all.
You won't even get the second meeting.
Right. That's what I'm saying. Is that like value is important because it allows, like a client could say, hey, I bank with, B of A, and they've done all my loans, and I've never used anybody else, and I'm a, platinum plus client with them. But my realtor called me and said I should use you. What makes you different? If you can't show them value, if you can't ask disruptive questions, if you can't get them to realize that there's a lot they don't know and there's a lot of value that B of A never added, then they're not going to give you a shot. They're just going to be like, oh, okay, great. Well, I appreciate the time. I'm just going to go with my B of A guy, right? So I don't want to downplay the importance of relationship. I just don't think it stands a chance of just being enough, right? Value is going to be the number one thing all the time. Right. And then relationship is what keeps it in play.
So you just hit on a few things in that scripting that I'd like you to go deeper on, because I don't want to assume that those that are watching and listening to this know what you mean by converting 80% versus 40% and referring you 5 buy sides a month and all of these types of things. Can you go deeper with the value proposition that you're talking about and that you're teaching the Justin Padrones of the world and teaching people in the Loan Atlas about, and in the boot camps that we do and all of that?
It's a lot, right? Each one of those things is a kind of a unique, different segment. When it comes to referring business to agents, that's always been kind of one of our Achilles heels as independent mortgage professionals, is that most of us don't generate, a lot of leads on our own, right? Most of our business is client referral, business partner referral of some sort. Some of us, there are some mortgage professionals that create, leads on their own, or they buy leads. Our partnership with Better is going to change all that, right? So this is a new revelation for us, right? Which is, we're generating 30,000 buyer leads a month, right? So we can now go to real estate agents and show them the amount of business that we're creating. Talk to them about how that client needs a really amazing real estate professional and what that means and what a partnership would look like there. So that's just a unique benefit that we have. I realize that doesn't transfer to a lot of people. And so it's not something I can necessarily coach outside. When it comes to the value proposition, though, that is something that we coach on a lot. We teach it in Loan Atlas, right? We teach it in Neo. And we see it. The boot camp was really awesome because we saw people go take the presentations that we do, the Real Estate Professional of the Future presentation, and the feedback we got was just amazing. They're like, they'd never heard it before. They'd never thought about it before. I got like 6 meetings from one presentation. I got 2 new partnerships. I got X number of referrals. Because the real estate agent has a real problem, right? It's that their product is exactly the same as every other real estate agent. In the mortgage industry, we at least have some uniqueness, right? Because maybe I have access to a product that another lender doesn't, right? Maybe I can, my underwriting guidelines are a little bit easier than somebody else's, right? Maybe my ability to structure a loan, gets you into a property versus somebody else. Real estate agents don't have that, right? It's really just what they're willing to do the deal for, right? Their commission and their customer service or their experience, right? And that's a really hard to win clients that way. So what we've done is we just said, look, real estate community, stop selling the same product as everyone else, right? Stop talking about how great you're going to be for the next 30 to 60 days, right? Instead, let's show people what they get if they work with the real estate professional of the future, right? Like, what can you commit to your clients that is going to be so much more valuable than your competitors that they would be out of their mind to not use you, right? And that's really what that long-term value is that, if I'm a real estate agent, I'd say, Tim, most real estate agents will be likely pretty good at helping you over the next, 30, 60 days as you're trying to buy a home, right? That I would assume that the good ones will all be somewhat equal. The problem is, I think that you paying, commission to an agent for 30 to 60 days of 3% or 2.5% is likely too much, right? For that time period. But the commission that you pay to our team, Tim, the XYZ real estate team, is not for 30 days or 60 days. It's for the next 30 years. And our commitment is that we're going to help you not just own a home, but to become the most successful homeowner in every aspect of real estate or finance. And our commitment is that we're going to be proactively working with you year in and year out to help you grow your real estate portfolio, to help you ensure that you have all the protections you need in place, to ensure that you understand generational wealth planning, not only through real estate, but financially with your parents and your children. Our clients don't choose us because we're cheap or have good customer service. They choose us because they end up having a much, much better financial outcome years from now because of our proactive nature. Like, no real estate agent has been able to say that before.
They have to follow through on that.
They do. I mean, unless they just want to be a liar.
Yeah, correct. I mean, so I'm curious, in that scripting, it feels to me like there's a real dynamic need for there to be a lending partner in that equation in order for, yeah, right. I mean, because like so many of the things that you're talking about there that the real estate professional of the future needs to provide is that partnership with a lender who is going to help them with that generational wealth. What about the 40% to 80%? Is that just a part of a byproduct of this dialogue that you just shared with us? Is it you're just going to convert a higher percentage of people than you are right now because your presentation is unique and infinitely more valuable than your competitors?
No, that really has to do with understanding what our job as mortgage professionals is. So if you, and I really want to do a poll on this at some point. I'm not sure how I'd pull it off. Maybe you can help me. But if we polled the mortgage industry and we said, what is your job when working with a home buyer? What is your job? Almost everybody, and you could bring the consumer into this, you could bring the real estate agent into this. Like, we could all ask, what's the job of a loan officer, right, when they're helping a prospective home buyer?
To get them a competitive interest rate, to get them in the home on time, to get their loan approved efficiently with great customer service, things like that, right?
100%. Yep. That's not our job anymore. It used to be, right? When homes were affordable, when rates were low, when there's a lot of inventory, right? When it just made sense to buy a home, right? When you could sell your home and, your 3% rate, and you could buy your next home at 2.75, right? Like, all these things were intuitive. Now, homeownership is really counterintuitive, right? So our job as mortgage professionals has fundamentally changed. It's now to remove fear, anxiety, frustration, uncertainty, lack of education. And it's to replace it with excitement, confidence, motivation, education, and a vision. But most mortgage professionals don't know that, right? And so when we talk to our real estate agents, we get to say, hey, Tim, how many times, if you talk to 10 people about homeownership, right? Let's say they own a home or they don't own a home. How many of them say, I'm not sure, it's not the right time, I kind of want to, but I'm not ready, rates are too high, I'm going to wait for rates to come down, I'm going to wait for this, I'm going to wait for blah, 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 right? Out of 10 conversations, how many of those are happening? Most real estate agents would say 8 or 9. Mm-hmm. Right? That means 80 to 90% of the time, they're talking to people who kind of want to, like, maybe, but have no idea how, right? Or if it would make sense. I would say, Tim, I want every single one of those clients referred to me. And they would say, well, why? Like, I would say, well, how often are you referring those clients to your current lender? I'm not, because they don't want to buy a home. They don't want a mortgage. No, that's not what they're saying. What they're saying is they don't think it's a good idea. They don't know. Nobody's taught them. They're not educated about it. That's really what they're telling you. My job is different than what you believe my job is as a real estate agent, or you being a real estate agent. So I want you to refer every single conversation you have to me. A homeowner who has a 2.75 rate, who says, I'd love to do something else, but I'm not getting rid of my rate. I want to talk to that person. Right? A home buyer that says, I don't think I can afford the home I want. I want to talk to that person. Right? Like, but you're not referring those people to your mortgage professional because they wouldn't know what to do with them. I do. Right? That's how your conversion is going to go way up. Right? So we're going to help people remove all those uncertainties, and they're going to have a game plan, a path, and a timeline. And you're going to be a part of helping them do that.
I'd be curious as to what the script is, because you got to arm the realtor with the script
sure.
as to how to refer you. So let us hear what the script is on if you're having this conversation with me and I'm the real estate agent, what are you sharing with me as to what you want me to say to those people?
So I'll be the realtor, you be the home buyer or the prospective home buyer who's not sure, like you're currently renting, you kind of want to buy a home, but you don't know. So Tim, have you thought about buying a home? I know, we talked about it 6 months ago and you kind of said you weren't ready. What are your thoughts now?
Like these fucking rates are too high.
Yeah, they are higher than most people would like. Tim, I apologize if I didn't do this 6 months ago when we talked, but I want you to know my job as a real estate professional is not to sell you a home. Right? Like most people think that's what my job is, right? To convince you to buy a house. That's not what I'm here to do. Honestly, I want you to know my job is to make sure that you have all the information, all the education, and all the confidence in the world to know if buying a home even makes sense or not. And what it sounds to me like after our conversation today is that you haven't sat down with anybody to go through that process, to really understand how your personal economic situation relates to the housing market, right? Relates to mortgage rates of today. So what I would encourage you to do, and I'm encouraging all my clients to do this now because this is a kind of a revelation to me, is that I would encourage you to meet with my financing team. They're not going to run your credit, right? They're not going to ask you for a bunch of documents. They're not going to convince you to get a mortgage or buy a home. What they're going to do is they're going to ask you some really great questions about kind of short-term, long-term goals. They're going to give you really great information about the housing market today and the future of it. And then they're going to show you what options might exist, right? In a way that you don't have to try and do algorithms to find out if this makes sense for you or not. And one of two things is going to happen at the end of that consultation, right? One, you'll find out it's not the right time and it doesn't make a ton of sense for your personal financial situation, but we'll have a plan, a strategy, and a timeline on when we can execute that. And myself and our financing team will be constantly working with you towards that process, as opposed to you just constantly being in a state of wonderment and hopefully figuring out it at some point. Or it could be that what they show you actually gets you to understand that there's probably not a better time than now to buy a home. And if that's the case, then we can just execute on the plan at that point. But either way, I'm indifferent to the outcome. But what I really am not okay with is you just not having the answers, right? You not having information. Like every one of my clients has a plan, a strategy, and a timeline, even if they currently own a home, right? It's for an investment property. It's for a second home. It's for a move-up property. Because that's what people really need from us. They just don't know that's what we do. So I promise, and I'll whatever your hourly rate is, if you don't think that conversation and that consultation with the financing team was worth your time, I will reimburse you. But I've never had a client tell me that wasn't helpful. They've actually told me quite the opposite, was, wow, thank you so much. That gave me a ton of information that I didn't have. It helped me see things I wasn't aware of. So would you be open to meeting with the financing team just so you don't have to just wonder when you should do this?
Sure. So going off script, I'm glad that we role played that. I have a couple of things that I want to say. The first thing is it's a simple yes or no response. If you do it every time, you're going to get some percentage of people, and it'll be a high percentage if your scripting is strong. They're going to just say yes. And now you're going to get them over to the lender, and that lender is going to convert a certain percentage of those people, which you wouldn't have gotten. It's just simple math, right? The people that say no, so long as your scripting is not pushy, the people that say no are not saying no to you and they'll never want to work with you again. They're just saying, no, I don't see the value in what you shared with me and I don't want to spend the time doing it. But it's not like you're going to lose them. And you can just simply say, okay, no problem. I'll stay in touch with you. And you're no worse off than you were if you didn't use the script at that point. So you can't lose in this. That's the first thing. The second thing is that as an originator, you have to consistently evolve and be prepared to deliver on what that realtor is saying on your behalf, right? Like now when if I take Ryan as my realtor up on the offer and I go over to Justin Padron, who's Ryan's partner, that's a lender, Justin's got to crush it. And as an originator, I want everybody to take this seriously, that you have to constantly be improving and getting better at the way that you present yourself. And if you don't have the resources for that, there are plenty of places to go to get the resources for that. You can do one of the boot camps that we do. You can subscribe to the Loan Atlas. You can get coaching from another coaching company. But for God's sakes, like, take seriously the importance of you being able to convert more lead opportunities for your realtor partners, because that's where you're going to be way more valuable to them and have a cemented and completely loyal relationship. The only thing that I would tweak to your script, just as a thought, is, and I've never played with this. It's the first time I've heard you say it in this iteration. So I think I would say something along the lines of, Ryan, one of the things that I strongly recommend, because I've seen the value in it for so many of my clients, is that you meet with my lending team with and they're willing to do a free consultation for you. Their time is obviously very valuable. I mean, they're business professionals, but due to the nature of the relationship that I have with them, they've agreed to meet with people such as yourself and not charge for it. And do it complimentary. And I think that if you spend 30 to 45 minutes with them, you'll find it to be incredibly valuable. The most important thing to me is that you are proceeding, whether it be moving forward with looking to buy property or moving forward with being on hold and saying this isn't the right time. The most important thing to me is that you're making an informed choice on that. And I don't want to take the chance that, based upon the stuff that you've read in the media or that others have shared with you, that you're fully informed. I'm certain you'll be fully informed after spending 30 to 45 minutes with my lending team. So I'd like you to meet with them, establish a game plan. We'll review the game plan together afterwards. I'm not invested in whether or not you want to move forward now or move forward later. That'll be ultimately your choice, but I want it to come from a place of education. Some version of that. Like, I think that what I'm trying to do there is make it feel special, that like almost like I've negotiated with this lending partner of mine to work for free for me as a value-added bonus to you. Some iteration of that. What are your thoughts on that?
I love that. And it's interesting because Jim, when he started doing these consultations with clients, he had, I think, 2 separate people at the end of the consultation be like, Jim, this is incredible. Thank you so much. How much do I owe you? Right? They were ready to pay him on the spot for the consultation because they found so much value in it, and they've never gone through anything like that before, right? Like, they never met with a financial advisor. They've never had anybody take interest in their real estate or financial livelihood, right? And so I love that frame because we are committing to do that as an industry or as a mortgage professional, right? We're committing to spend sometimes an hour and a half, right? 30 minutes on the dreams and goals call, an hour in the pre-purchase consultation, with no expectation that we are going to earn income or revenue from it. So it's not even not truthful, right? It's serious. Like, we're agreeing to do this, and you may never buy a home, but we're okay with it.
Yeah, it is kind of antiquated and ass backwards in that regard, isn't it? Like, I mean, the way this profession's always been done is that we're doing everything on the come. Like, we're going to invest a whole bunch of time and hope that you say yes to us. What would it have looked like if the mortgage industry would have originally been structured to where you actually have to pay for that consult? And
there's never been a consult. That's the thing. Like,
that's true. That's true.
Yeah, it's always just been pick a rate.
I guess that becomes the ultimate question. And it goes back to that statement that we've talked about before. Would you rather be known as always available or worth waiting for, right? It's kind of in that same family. It's like, what would it look like? Here's a question for everyone to ponder. What would your presentation need to look like to where you could justify charging $500 for somebody to sit with you for an hour? Like, what would that look like? Like, and what if you built a presentation that was literally worth that? I think you'd be an infinitely more successful originator, and it will be a whole lot easier for you to get real estate partners and accounting partners and financial advisor partners and divorce attorney partners, because if you sat down with them and delivered bomb presentation for 45 minutes that had them going like, shit, like I just learned a lot. Back to your point, who wouldn't want to work with you ultimately? So let's pivot to, and by the way, I mean, first of all, great scripting. And for those listening, I mean, the Loan Atlas has all of this stuff and so much more in it.
Yep.
And this is not a shameless pitch for the Loan Atlas, but to those of you that are actually finding this of resonance for you and going, where do I get this content? That's where you get it. And it's not very expensive. Let's talk about another topic. Maybe this will be our last topic. We'll see how long it takes. But recently you and I are playing some golf, and you're pretty amped up, not over your golf game for obvious reasons, but you're pretty amped up. Not like I played well that day. You were pretty amped up over some things that you've recently seen from a technology perspective. And I guess it was fascinating for me because having been friends for a long time now, like I've never seen you really, frankly, buying into the need for artificial intelligence and advanced technological platforms in order to be a successful originator. But boy, did you do a pivot back to that book you referenced, and you became very bought into the lender of the future needs to have tech. What kind of tech do you see as being critically important to an originator being successful in, say, the next 5 to 10 years? If you could look out that far, that might be too far out.
I mean, I'm sure there'll be an infinite number of changes in that time, but the reason I'm so excited about it, Tim, is because I've made it part of my professional mission to be in the same circles and communities as the top mortgage professionals in the country. Early on, me being a hyper competitive person, I always looked at the top mortgage professionals in the country, and I always wondered, what are they doing? How are they doing it? Right. So I would fly all over the country. I'd do site visits. I'd get in coaching groups. I'd get in masterminds. Like I would be in the rooms when these people are talking about what makes them successful. And I still do that today. Right. And, Shant and I had, breakfast the other day.
Oh, cool.
And, just talked about what he's doing and strategies there. And the one common, the consistent thing that I never hear is technology. No top producer has ever attributed any portion of their success to their technology. Everyone is successful in spite of bad technology. Right? They just deal with it. Why? Because it's what we all have. Right? 80% of us use the same LOS, and we use the same point of sale systems, and we use, whatever the CRM of the day is. And we're always trying to figure out what tech and this and that and the other, and we're bolting things on, or what's the new thing. And we're always trying to figure it out. Right. When I saw this technology, it created excitement, but mainly fear, because I saw this do
give us a little bit of a background, because nobody has any context. What technology you're referring to?
So Tin Man is a proprietary technology that Better Mortgage has created, started in 2017. They were able to go from 0 to 58 billion in 4 years, which no company's ever done before. And what they showed us, it created fear because our underwriters in our industry that are on Encompass or other LOS systems, they struggle to underwrite 2 to 3 loans a day, right? And they really struggle. They're waiting for the spinning wheels, and they're, doing this and that and the other, and can't get out of a file, and all these things. And so they're working their tail off to help 2 to 3 families a day. Better's underwriters average 13.2 a day. We were able to see a client go from application to fully underwritten and lock their rate in 38 seconds with no human interaction. When someone clicks that they're interested or inquiry, they get a call from a virtual AI chatbot in a nanosecond. And we're listening to these recordings, and you cannot hear the difference in a human being or this person, and they're getting better every month.
Human being, or when you say this person, AI. You mean or the AI? Got it.
Correct, right. And so I'm thinking through all the applications, right? Like if rates drop 1%, most mortgage companies are going to be in a really hard spot because we're all going to call every underwriter that we know, every processor, every closer funder, every production partner, whomever, because we need a bunch of support, right? Because we're going to have a lot of clients. And because we're all going to call the same people, we're going to get in a bidding war and we're going to have to pay them a bunch of money. And then our cost of fulfillment goes way up. And we just saw this over the last 6 months, right? Rates go down, we hire, now rates are back up, and we have to lay people off. And it's because technology has not created any sort of scalability in our business. It's actually done quite the opposite. That's why cost of fulfillment keeps going through the roof. Better's cost of fulfillment is already 35% lower than the industry average, and that's going to continue to drastically go down. And so I believe the mortgage professional of the future will be able to help 100 plus families per month without having to spend more time or hire a lot more people. I believe that they'll be able to integrate the AI virtual assistant along with their existing team to do a lot of tasks that take a ton of time and energy. Follow-up, reviews, calls, scheduling calls. You literally can call in as a client and say, hey, what's my debt ratio? What's my max pre-approval? Tell me about this. What if I paid off that? And you're literally just talking to a computer that's answering all your questions. Right? So at first, our team was a little scared. They're like, well, that was my job. So what do I do now? Mm-hmm. And it's like, well, now we all collectively, if you were helping 15 to 20 families a month, right? And the reason you were capped at that was because it took so much time and energy to do the minutia. And let's say it's a loan coordinator or a production partner or a processor, right? Well, now that person, that teammate, that support staff, they can help 100 families a month, but they're only doing the really useful things like asking for referrals, asking for testimonials, connecting with that client, creating deeper relationships, adding more value, just the stuff that really moves the needle, right? Like you never see in a client review or testimonial, Darcy is one of the best loan coordinators on the planet. She's been on my team for a decade now. Her testimonials never say she was really good at explaining my CD or LE, or she was really good at, making sure I always knew what my debt ratio was, or I knew what to pay off. It always says she was so helpful. She was so kind. She was so empathetic. She, always was proactive with me and helped me feel really good. Or it's the way you make people feel that they remember. So if our team can just focus on making people feel great, not all the minutia, and they can help 10 times the number of families, right? Then we don't actually have to, we don't reduce our staff. We just don't need to add staff as we grow exponentially. And what that does is it lowers the cost of fulfillment to a point where it's not even a fair fight, right? Like this technology is going to revolutionize this space. And again, I never gave much credit. People always talk about, mortgage technology, and it's like, I've never seen any mortgage technology that moves the needle for any originator. So until I do, I'm just going to do what I do, right? I'm just going to keep using what we use, and everybody's in the same boat, right? Misery loves company. So we all talk about how our tech sucks, but we use it anyways. Not anymore, right? Like that's why we made this pivot. Because if you can combine industry changing technology that allows every person to be in their genius zone at all time, not only is it massively more fulfilling work and inspiring work, but the scalability of it goes through the roof, and the competitiveness will start to become almost untenable, right? Because if it costs someone else $13,000 to originate and fund a loan, but because of our technology, our scale, our resources, and our economic model, we have it at $6,000, right? On a $400,000 loan, that's almost 2 points. And you just can't compete with that.
But imagine that there are other companies within the industry that are in the process of trying to build stuff like this, right? I mean, are you aware of that? I mean,
I feel like I would have heard it, right? Obviously, Rocket's technology, there's some, I don't know what they're doing, but they don't have a retail division, right? They have a call center and then they have their wholesale division, right? But you can't really leverage a wholesaler's technology in your business, right? It's not even the company you work for, right? So you have a lot of other challenges. UWM, in my opinion, has a lot of great technology from what I've heard, but same thing. All they have is a wholesale industry. I don't know any mortgage company that has a retail distributed sales force, guys like me and you that were out there on the streets, local mortgage professionals that have any decent technology. That no one has said to me, my company's technology is why I can do so much and help so many people or be so effective.
I mean, I think that Cardinal with Octane, a little different, right? Like, I don't think that there was a lot of AI involvement to my knowledge, but that's an example of where I believe that, from what I understand, originators got a lot of great, a decent amount of additional efficiency by having a technological platform that helped them facilitate loans faster. Would you agree with that statement, or do you not agree with that?
I don't know enough about Octane to speak intelligently on it. I've seen it a little bit, right? And I've heard from some of the people there, but I don't see a lot of people at that organization that are really helping dozens, if not hundreds, of families a month.
No, not at that scale. Not the scale you're talking about. Yeah,
right. Like I'm talking about like you being a mortgage professional and not having to worry about 90% of what you worry about today.
Yeah, I mean, it sounds exciting to me what you described, because it kind of speaks to what I've always said is, ultimately your job description should be really finite. There's just not a whole lot of things that you should ultimately be doing if you want to scale and you want to be a super successful loan originator. And it sounds like this removes a lot of those red activities in the Genius Grid process that we do that you're very familiar with, and just allows you to be above that line a lot, where you're focused on relationships, adding value, connecting, staying in touch with, nurturing, and then from there, generating a ton of referrals because you own a ton of relationships. I mean, when I talk to originators, and obviously I talk to a lot of them that are doing like 3 loans a month, 2 loans a month, stuff like that, and they're slammed. And I'm like, oh, wait a minute, let's talk about this for a minute. Okay.
Yeah.
You talk to them a lot too, right? They're like, I'm totally overwhelmed. How many hours a week you working? 60. I'm like, 60, and you're doing 3 loans. All right. Let's take a look at your day, man. Like, what are you doing all day? Because you should not be slammed. You should be on a beach drinking a pina colada if you're doing 2 or 3 loans a month, right? I mean, and I'm not making fun of people. It's just the truth. I mean, you and I know too much. I mean, we used to do 50 loans a month and work a relatively normal work week. And that's because we shed all that stuff and focused on just the things that you're talking about, which is talking to people who need to borrow money and people that can refer you to the people that need to borrow money. And if you, when you listen to the John Wade episode, you're going to see that's what he does. That's why he's successful. He's just really good at that. And you don't need to be good at a lot of things. If you're good at that, you're going to be great in this business. And what you're talking about from a technological perspective is that this just takes care of all that shit that most people are doing all day long that they shouldn't be doing.
Yeah. The difference is that the people who get to be in their genius zone most of the day, all they're really doing is they're removing it from their plate and putting it on another human's plate.
And paying for it.
Right? So now their cost of they still have to have higher margins. They still have to have higher rates because they have a team of people that are, all the stuff is just running downhill to more people. This, you don't have to do that, right? You could have your existing team of 1, 2, 3, or 4 people. Like Caleb Legrand's a great example of this. He saw it immediately and he was like, this is going to change everything. He's like, my team we'll help 10 times the number of families and I won't have to hire anybody else.
Mm-hmm. Well, and that's a guy who is historically, as we both know, I mean, Caleb has always run a larger team than most people would for the volume that he does, because he cares so much about excellence. He cares so much about that service platform of his. And I'm thrilled to hear that his response was what you just said, because I would have been concerned that when he saw it, because I don't know how many people he has on his team right now. Like, is it 8, 10?
8 to 10, something
okay.
like that.
Okay. I would have thought that he would be like, because he cares so much about those people as people, that he'd be like, no, what am I going to do? No, I'm going to have to let my people go and they're not going to have a job. But he's actually looking at it from the mindset that's that beginner's mind that you're talking about. Like, oh, wait a minute. Let's not look at this the old way. Let's look at this the new way, which is, how do I now reallocate this team of mine to doing more of the activities that move the needle and just exponentially expand our business?
Yeah, Danny said this really well. He's like, think about a processor on your team, right? And if you're helping 15 families a month, it definitely makes sense to have that processor, right? Because they can handle all those loans, they can get them done. It's great, right? But if you start dropping into 10 families a month, right, or 5 families a month, it's really hard to justify keeping, a full head count when they're only operating at 30 to 60% of their capacity. Mm-hmm. And by the way, they top out at 25 to 30, right? So you have a narrow window where you either are going to let someone go or you're going to have to hire a new person, right? And you're always trading in this narrow window. Well, now that processor can help 15 people, but they can also help 100 people.
Yeah.
All right. So if you scale your business up to 70, that means that processor is safe. Even if you have a, 60% reduction in your business, they're still safe. Mm-hmm. So what technology does is it actually creates more safety for people because they can scale all the way up, but it still makes sense all the way down to 15. Right? You just don't have to trade in a narrow window where you always have to hire another person here or fire another person here. Right? And that's really what Caleb saw. And that's what we all see. It's like, this is going to create a ton of safety for people who are a part of it. For the people who aren't a part of it, it makes them feel unsafe because it's like, oh, well, I kind of want to be on that ship as opposed to getting run over by it.
Yeah. And this kind of brings our conversation full circle as we wind it down. I actually have a coaching session with Caleb at the top of the hour, so I got to get ready for that. But
tell him hello.
Yeah, I will for sure. It goes back to what you were talking about at the very beginning, which is, that beginner's mind, that willingness to kind of throw out the window what you know and get curious as to what you don't know and how to remake yourself. I mean, the adaptation of technology is probably the most important, or best example of this that you could probably cite in business is, getting curious with what can this create for me and not being resistant to the change. So the people that are, with us on this conversation right now, I would implore you to think about, how you can embrace technology at a higher level and look at it through the lens of how it can make you better at what you do. I mean, that fear-based mind will always go to, oh, is this going to replace me? As you said, that some of the originators that you showed it to were concerned about. And I said, oh, let's not look at things through that lens anymore. Let's look at things like, how can I have this be a prop motor behind my boat to get me where I want to go in a more efficient and faster way?
Yeah. And I want to thank you before we leave here because, early in my career, especially as I was kind of climbing the ranks and doing more and more, I didn't realize it, but I struggled with ego in that, I always thought that what I was doing was the right thing, right? Like my way is the right way. And, this is, I don't need to change because I'm successful. And I think that's a big inhibitor to people's growth, right? Like ego is the enemy, is not just a fancy book title. It's a real thing. And, being a part of L360, being a part of Loan Atlas, being a part of the community that you created, really helped me with that, to always stay curious, to always ask what if, to always, not be afraid that I might not have all the answers, right? And to be open to learning. If it wasn't for that, I don't think, Neo wouldn't exist, right? And this partnership with Better wouldn't exist, because we would have been stuck in the fact that, no, it's us versus them, right? It's, they're an online lender. We're a local lender, and, we don't need to cooperate or collaborate, and there's nothing that anybody else can teach us. And I think that, I think there's a lot of people that unfortunately are still in that space where they just think that like, because what they're doing right now is working, that there's no opportunity to improve or learn or get better. And I really hope that we can help open people's eyes to the fact that, this doesn't mean you need to change companies. It doesn't mean that you need to, make radical shifts. It just means you need to be open to the question of like, what if there's something I don't know, right? What if there's something I'm not aware of? Like, curiosity is one of the greatest gifts that I've learned in the last 7 years, and I just want to say thank you for that, because I don't know if I would have been in this position otherwise.
Well, thank you. First of all, you're welcome, and secondly, thank you. It was very kind of you to say that, and I love how you tapped into that word curiosity. I think it's one of the great virtues that any of us as human beings can possess. It's where growth lies. When we cease to be curious, we become stagnant. And that what if and like, what do I not know here that I could be excited about learning? What do I not know about what I can be doing differently that could actually take me to the next level? Like, if we could really shift from the fear of change to the embracing of curiosity, I think it helps us all get better as human beings and as business people. Bro, thanks a lot for your time. Tomorrow's Thanksgiving. Happy Thanksgiving. Obviously, this will be airing after Thanksgiving to you and your family. I hope you guys have, celebrating in your new house.
We are.
Yeah. Right on. I hope you guys have a beautiful Thanksgiving dinner. And thanks for your friendship, man, and for being such a great teacher.
Yeah. Thank you, man. Super grateful for you. Hope you and the family have an awesome day as well. And anybody watching, hopefully you had a great Thanksgiving whenever you see this.
Yeah. Right on. Bye-bye, everyone. Thanks a lot for tuning in, and we'll be back at you in a couple weeks.